Done, people? Done. Okay, people. So now someone is asking, sir, that sir, we have not solved this question paper. So can we leave now? Yeah, you can leave now. Today we will discuss only about this paper. We are not going to discuss anything else. Today we will discuss only about this paper. So you can leave. Suprita, if you have not tried this paper, then this lecture you can watch after solving this paper. And if you have doubt, then you can watch this lecture. Okay. So one very simple paper, depreciation. Next time, next Sunday, this Sunday you will get the paper that will have some strong point. But otherwise this paper was very simple. So this paper was simple. Now we are going to start with the discussion on this paper. So how many people tried this paper? Just tell me. You have tried or not? Meghna. Okay, cumulative chapter test. Normally we will restrict to the PGBP on this Sunday as well as next Sunday. You will get the PGBP. After that, every time you will get the 2-3 cumulative. Because in the future topic, there will not be more time. Because math we will complete within 2 days. AMT in the half days. SEZ in the half days. Business trust in the half day. So that now that topic will be go very fast means it will not be very time consuming, but it will have the very good weightage in the examination. Okay, Nehal. Done, people? Okay, so let's try the question number 1. So question number 1 is Mr. Akash is engaged in the question number 1. Mr. Akash is engaged in the business of. So here, Mr. Akash is basically engaged in the business of running motor car on the hire. So Akash is running motor car on the hire. His brother Mr. Vikash is a dentist. Mr. Akash and Vikash each purchased the motor car of the value of 5 lakh on 1/11/2019 for their business and profession and put the same on the use immediately. The written down value of motor car as on 1/4/2019 may be taken as 50 lakh for the Akash and nil for the Vikas. What is the depreciation allowable in respect of motor car to the Mr. Akash and Vikas under section 32 for the assessment year 24-25, assuming that both of them have not opted for the special provision of section 115 BAC. So they have not opted the 115 BAC. They are asking you how to calculate the depreciation. So guys, first we calculate for the Akash. So here, Mr. Akash. So guys, in case of the Akash, can I say that in case of the Akash, your Vikas purchase here, written down value may be taken as 50 lakh for the Akash. So guys, here, Akash is engaged in the business of running motor car on the hire. So can I say that Akash is having the 30% block? 30% block, and opening WDV as on 1/4/2019 is of 50 lakh rupees, right? 50 lakh rupees for the Akash. 50 lakh rupees for the Akash. Now guys, what happened? Akash purchased one car and Akash purchased one motor car. He is engaged in the running them on the hire and he purchased on the 1/11/2019. So can I say that he purchased one car on 1/11/2019? 1/11/2019 only? Yeah. And guys, he purchased for the 5 lakh. Question is that this is part of same block or it will be part of the different block? Right answer is different block. Because if you remember, we have discussed that if you purchase and put to use any motor vehicle between 23rd August 2019 till 31st March 2020, then if from 23rd August 2019 till 31st March 2020, then your depreciation rate is going to be double from 15 to 30% and 30 to 45%. So can I say that here in case of Akash that depreciation is 45% in case of any plant and machinery purchase on 1/11/2019? So on 1/11/2019 that 5 lakh rupees motor car is purchased. So on this depreciation will be of the 5 lakh or 45%. So here guys, opening WDV as on 1/4/2019 on this asset you will calculate the depreciation normally. So just calculate the depreciation 30% for the previous year 1920, previous year 2021 and previous year 2122, and after that previous year 1920, 2021, after that 2122 and 2223, and last they are asking about the 2324. So what could be the depreciation for 2324 on the 50 lakh? So guys, can I say that on the 50 lakh, first you will reduce 50 lakh minus 30% for the first year, second year minus 30%, this is for second year, third year minus 30%, after that third year minus 30%, after that fourth year minus 30%, and for the fifth year, can I say that here it is comes to the 3,60,150. I think 3,60,150 is a depreciation for 23-24 on that 50 lakh block. Now 45% rate, but guys, in this year this asset is used for less than 180 days. So can I say that this 45% will be half rate? So can I say that here 545 divided by 2, it comes to the 22.5. So in this year it is a 22.5%, after that 45%, after that 45%, after that 45%, and here also 45%. So here can I say that on the 5 lakh, first minus 22.5%. So whatever remaining amount minus 45% for this year. After that minus 45% for this year. Again minus 45% for this year. And guys, on this 45% it comes to the 29,012. That is your depreciation for current year. So can I say that in case of the your Mr. Akash, your depreciation amount is 360 150 plus 29,012. So it comes to the 3,89,162. So here for the Akash, that depreciation is 389,162. Now in case of the Vikash, can I say that Vikash is engaged in he's a dentist? So normal depreciation 15% allowed, but guys, when he is engaged in the dentist, then for the motor vehicle 15%, but that motor vehicle is acquired during that particular period, then depreciation is 30%. So guys, here depreciation reduced for previous year 1920, after that 2021, after that 2122, after that 2223 and 2324. Now guys, can I say that for the 1920, that depreciation the rate is out of 30% only 15%. Here it is 30%, here it is 30%, here it is 30%, and here it is 30%. So just calculate the depreciation. So 5 lakh minus 15% minus 30% minus 30% minus 30% and 30%, it comes to the 43,733. So this year depreciation is 43,733. So right answer is, I think C is the right answer. How many people solve this question correctly? Just tell me. In the first attempt, first time, how many people got the right answer? That answer number C. Just tell me. I am waiting for your answer. How many people solve this question correctly in the first time? So here guys, C is the right answer. 389,162 and 43,733. Is your answer right? Okay. Question was simple. Question was not that simple, na? Because you have to remember that date also. Like 23rd August 2019 till 31st March 2020. You have to remember that date also, na? Okay. In second time, your answer was correct. Na? Okay, very good. Okay, so question number 2. Now all other questions are simple question. Mr. X set up a manufacturing unit in the Warangal in the state of Telangana on the 1st June 2023 in the current year. It invested 30 crore in the new plant and machinery on 1/6/2023. Further, it invested 25 crore in the plant and machinery on 1/11/2023, out of which 5 crore was second-hand plant and machinery. All plant and machinery were purchased by way of the account paycheck. The depreciation allowable under section 32, you have to calculate. So guys, here SSC started the undertaking in the current year. He purchased the new plant and machinery of the 30 crore first on 1st June 2023. So that is of the full rate. Now again he purchased the 25 crore also. So that is the half rate. This 25 crore is for the half rate. and 5 crore is a second hand, so on that obviously additional depreciation is not allowed. So if I talk about the depreciation, then can I say that on 30 crore 15% depreciation allowed, and here 7.5% depreciation is allowed? So on the 30 crore multiply by 15%, it comes to the 4.5 crore here. And guys, here on the 25 crore, just take the 7.5%, so 1.875 crore. This is the normal depreciation. Additional depreciation is also allowed. So additional depreciation on the 30 crore, it's 20%, comes to the 6 crore. And guys, just on the 20 crore, it is a 10%, it comes to 2 crore. So here additional depreciation is 8 crore. Additional depreciation is 8 crore. So 8 crore plus 1.875 crore plus 4.5 crore, total comes to the 14.375 crore. So here it is your right answer. C is the right answer. It should be the A, B and C and D. So here C is the right answer, 14.375 crore. So I think this answer may be the right, obviously. Next question number 3rd. The WDV of block, plant and machinery, rate of depreciation 15%, that is opening WDV as on 1/4/2023 is 3,20,000. So here opening WDV is your 3,20,000. 3,20,000 is your opening WDV. A second-hand machinery costing 50,000 was acquired on 1/9/2023. Second-hand machinery is acquired for the 50,000 and it is used for less than 180 days. Through an account P check and put to use on 1/11/2023 half rate. During January 2024, part of this block was sold for the 2 lakh. Depreciation कितना मिलेगा? So just reduce the 2 lakh rupees. 2 lakh rupees is your money payable. So can I say that 3,20,000 plus your 50,000 minus 2 lakh. So here remaining is 1,70,000. Now guys, remaining is 1,70,000 and on this 1,70,000, 50,000 is second hand. Sorry, 50,000 is less than 180 days. So here it is allowed as 7.5%. So 50,000 multiplied by 7.5%, it comes to the 3,750. And guys, on the remaining 1,20,000, full rate of depreciation is allowed at the rate 15%. So 1,20,000 multiplied by 15% comes to the 18,000. So here 18,000 plus 3,750 total comes to the 21,750. So 21,750 is your right answer. So A is the right answer here in the question number 3. That question may be correct. Yeah. So this should be the correct. Simple question. Now Mr. X has a set up a manufacturing unit in the Chittor, Andhra Pradesh on 1st April 2022 in the last year. So in the last year, he has set up one unit, manufacturing unit in the Chittor. During the previous year 22-23 and 23-24, Mr. X has purchased the following asset. In the June 2022, in the last year, he purchased this plant and machinery X. So here it is a previous year 22-23 he purchased. This also he purchased in the previous year 22-23 only, that is office furniture he purchased. Now this also in the previous year 22-23 he purchased, that is plant and machinery Y. And on the 15 May 2023, that is the 23-24 current year, he purchased the plant and machinery Z for the 8 lakh. Mr. X has 2,000 equity share of MNO Private Limited on Mr. X has 2,000 equity share of MNO Private Limited on 21st October 2023. MNO Private Limited has brought back that share, brought back 50% share from its shareholders amounting to rupees 13,50,000, which were issued at 5,70,000, which include 1,15,000 towards the premium. So guys, company has brought back the share of the 13,50,000 which were issued at 5,70,000, including the premium of 1,15,000. Based on the fact of this case scenario given above, choose the most appropriate answer to the following question. So they are asking you some question. First is, what would be the amount of depreciation in respect of plant and machinery Y allowable as deduction while computing the income under the head PGBP for the previous year 23-24? So they are asking about only plant and machinery Y. So guys, plant and machinery Y is this plant and machinery. Now, and they are asking for the current year, what depreciation should be allowed on the 5 lakh. So guys, can I say that in the current year, now what should be depreciation allowed in the last year? So can I say that for the plant and machinery Y, they are asking about the Y only. So in the last year, this machinery was acquired on 14 January 2023. and this machinery was acquired for the 5 lakh. So guys, in the last year 14 January 2023, can I say that last year that depreciation was allowed 7.5%. So normal depreciation was 7.5%, and last year additional depreciation also allowed, because assessee engaged in the manufacturing business and plant and machinery, nothing is given, the new plant and machinery, additional depreciation also 10%. Additional depreciation also 10%. So can I say that last year 5 lakh multiplied by 7.5%, it comes to the 37,500 was normal depreciation and 50,000 was your additional depreciation. So can I say that 5 lakh minus 37,500 minus 50,000, so remaining is your 4 lakh 12,500. That is the opening WDV of current year. Now in current year you will claim the 15% depreciation as well as additional depreciation of 10%. So guys, 4,12,500 and 15% is depreciation, so 61,875, and 10% additional depreciation which was not allowed in the last year, so 50,000 is your additional depreciation. So here can I say that 50,000 plus 61,875, so your 1,11,875 is a correct answer. So 1,11,875 is the correct answer of this year. Now, what should be the total amount of depreciation for the current year allowable as deduction while computing the PGBP income? What could be the total depreciation? So guys, here 1,11,875 was a depreciation for the machinery Y. Machinery Y. Now guys, if I talk about the machinery X, then first you have to calculate the last year depreciation again. So on the 14 lakh 75, that is for machinery X, 14,75,340 multiply by, here depreciation for last year was 15%. Last year also additional depreciation allowed 20%, because second hint is not given. Oh no, not given. So last year depreciation as well as additional depreciation, so just reduce. So 14,75,340 multiplied by 15% was normal depreciation. So 15% normal depreciation 2,21,301. And guys, 14,75,340 multiplied by 20%. So it was 2,95,068 was additional depreciation. So current year opening WDV is 14,75,340 minus 2,21,301 minus 2,95,068. So remaining WDV of the current year is 358,971. Now current year depreciation is allowed at the rate 15%. So here 15% depreciation is your 143,846. So 143,846, this is your current year depreciation. 143,846 is your current year depreciation. 143,846 is your current year depreciation. Now one more point, guys, this is about your plant and machinery X. Now office furniture you purchased in the last year. So last year 10% depreciation and current year 10% depreciation. So 765,400 minus 10% depreciation for last year, and current year depreciation also 10%. So here 765,400 multiplied by 10%. So this depreciation multiplied by 10%. So it comes to the current year depreciation on the furniture is 68,886. So 68,886 is a depreciation of the current year on the furniture. Now one more machinery you purchase in the current year for the 8 lakh. So here guys, depreciation of the current year as well as the additional depreciation of the current year. So guys, on the 8 lakh machinery, first calculate the depreciation at the rate 15% and 20% is your additional depreciation. So here 8 lakh multiplied by 15% comes to the 1,20,000 and guys 1,60,000. So here current year total depreciation is 2,80,000. 2,80,000 is a current year depreciation. Now they ask the question, what is the total depreciation? So can I say that total depreciation is 1,11875 plus 143,846 plus 68,886 plus 2,80,000. So here it comes to 6,04,607. This D is the right answer. 6,04,607. This is the right answer. So D is your right answer. Now next part. What shall be the amount of tax payable by MNO Private Limited on the buyback of its share? Guys, we discussed one topic, buyback, and you know that in case of the buyback, whatever the difference, on that difference, company is required to pay the tax at the rate 20% plus 12% surcharge plus 4% health and education cess. I think 23.6 20 here 20% plus 12% plus 20% plus 12% plus 4%, 23.296%. So 23.296% on the distributed income. So here distributed income means they have issued the share at 5,70,000. So 13,50,000 minus 5,70,000, difference is 780. So on 780 they paid the taxes 23.296%. So it comes to the 1,81,710. This is your correct answer. After that, next question. An electricity company charging depreciation on the straight line basis. So electricity company can follow the SLM, no issue. Sale one of its machinery in the April 2023 at 1,20,000. The WDV of machinery at the beginning of the year was 1,35,000. 15,000 is treated as your terminal depreciation. So 15,000 here is treated as your terminal depreciation. So this is your terminal depreciation. Very simple MCQ. Now next part. Mr. X acquired an asset in the 1718 for the use of scientific research for 2,75,000. He claimed the deduction under section 3514 for the previous year 1718. The asset was brought into the use for the business of Mr. X in the previous year 2324. After the research was completed, the actual cost of asset is included as nil. That is the first explanation of section 43B. After that, next part. Mr. X is a retailer, acquired a furniture on the 10th May 2023 for 10,000 in the cash. So guys, he acquired the furniture for 10,000 in the cash. Here exact amount is 10,000. It is allowed, no issue at all. More than 10,000 is not allowed, but if it is exactly 10,000, it is allowed. Now for cash, and on 15 May 2023 for 15,000 and 20,000 by bearer check and account pay check. So guys, this bearer check is not allowed, because it is more than 10,000 in a single day to single person. So 15,000 is not allowed. Respectively, depreciation allowable for assessment year 24-25 would be, so can I say that 10,000 and 20,000 is allowed? So total is your 30,000. And guys, both put to use more than 180 days. So here depreciation is allowed at the rate 10%. So 3,000 depreciation is allowed. So B is your right answer. In question number 7, B is your right answer. Next part. Question number 1. Mr. Gama, a proprietor, started the business of manufacturing of tires. So this SSC engaged in manufacturing business. They are manufacturing the tires and tubes of the motor vehicle on 1/1/2023. So last year he has started the business. The manufacturing unit was set up on 1/5/2023. So in current year they set up the manufacturing unit. He commences manufacturing operation from the 1st June 2016. In current year they commenced the manufacturing operation. The total cost of plant and machinery installed in the unit is a 120 crore. And the plant and machinery included the second-hand plant and machinery bought for the 20 crore. And new plant and machinery for the scientific research relating to the business of SSC acquired at a cost of 15 crore. Now guys, whatever plant and machinery used in the scientific research, for that deduction is allowed under section 3514. So here deduction depreciation is not allowed. Now compute the amount of depreciation allowable under section 32 of the Income Tax Act 1961 in respect of assessment year 24-25. Assume that all the assets were purchased by way of account pay check and SSC has not followed the 115 BAC subsection 1. So here guys, can I say that you have purchased the plant and machinery of the 120 crore, but out of this 120 crore there is a second hand plant and machinery of the 20 crore. So no issue at all. On that 20 crore normal depreciation is allowed, additional depreciation is not allowed. But guys, 15 crore they have acquired for the scientific research. So just remove the 15 crore, because on that you will claim the deduction under section 35. So 120 minus 15, so remaining comes to the 105. And guys, in 105 your 20 crore of plant and machinery, you will claim the only normal depreciation, that is the 7.5%, and remaining is 105 minus 20, so remaining is 85. So on 85 crore, you will claim the 20% as 15% as normal depreciation, as well as the here like 20% as additional depreciation. So guys, on the 20 crore, if you claim the 7.5%, it comes to the 1.5 crore as depreciation here. And on the 85 crore, 15% comes to the 12.75 crore. Here it is a 12.75. And guys, 85 multiplied by 20% comes to the 17 crore. So here total depreciation is 17 plus 12.75 plus your 1.5. Total depreciation is 31.25 crore. So if you check the solution now, here solution is given 32. Is there any mistake? There may be a calculation mistake. Otherwise, this depreciation is correct. Okay. So here guys, if you check the solution, here 120 is total cost. Scientific research just removed. So remaining is 105. And on 105, 15% depreciation. Oh, I made the mistake there now. I claimed the 7.5%. No, na. There is a second-hand plant and machinery, but put to use for 180 days or more. Na. Then here guys, 15% only. Na. So here it is a 3 crore. Okay. So now you will get the answer. So guys, here your 105. So on 105, total normal depreciation is allowed, but additional depreciation is allowed. Additional depreciation is allowed only on the remaining plant and machinery, means on the new plant and machinery, additional depreciation is allowed. So you will get your answer. Okay. So this is the question number 1. Now after that, if we check the question number 2, was very simple question. Yeah, First Flight Limited is existing Indian company which set up a new industrial unit. So they set up the new industrial unit. It incurred the following expenditure in connection with the new unit: preparation of project report, market survey, legal and other expenditures. So 9 lakh is the preliminary expenses. The following further data is available. Cost of project is given and capital employed is given. We will take the whichever is higher. So whichever is higher is capital employed is 35 lakh. So guys, it is restricted to 35 lakh multiplied by 5%. So here 35 lakh multiplied by 5% comes to 1,75,000. And 1,75,000 it is allowed in the 5 equal installment. So it comes to the 35,000 every year. So in current year deduction allowed as 35,000. This is the question number 2. That was very simple for the 2 marks question. Now next part is question number 3. Question number 3 says that Mr. Venus engaged in the manufacturing of the pesticide. So this person is engaged in manufacturing business. Furnish the following particular relating to its manufacturing unit at a Chennai. So under Chennai, they are having the manufacturing unit. So manufacturing business, assessee is engaged in manufacturing business. For the year ended 31st March 2024, they have given some information. Now WDV of plant and machinery, last year WDV is given 30 crore. And depreciation including additional depreciation of the last year, they have given the 4.75 crore. So guys, always remember, when examiner give you the WDV of plant and machinery of the last year 31st March 2023, then question is that this WDV is the last year WDV before depreciation or after depreciation. This 31st March 2023 WDV is given is a 30 lakh. And last year depreciation also given, that previous year 22-23. So is this WDV is a last year WDV before depreciation or after depreciation? Right answer is before depreciation. Because in the block of asset, they define the WDV. If you remember the block of asset concept, now when I have mentioned that block of asset means normally our opening WDV plus purchase minus sale, that remaining is a WDV for depreciation. So this is the last year WDV for depreciation is given, Dushyant. Whenever examiner give you like this, WDV as on 31st March 2023 means it was a WDV for depreciation. It was a WDV for depreciation means it was a WDV for depreciation. And WDV for depreciation, from this WDV you have to remove, you have to reduce this. And current year opening WDV is now 25.25. So 25.25 is your current year opening WDV is 25.25 is your current year opening WDV. Now current year opening WDV is 25.25. Now in current year you purchase the new machinery. So on this particular machinery, normal depreciation, additional depreciation both allowed. Now new machinery purchase here, half rate of depreciation is allowed. Computer purchase on this date. Now some information is given. 1. All assets were purchased by account pay check. Yes, all assets were put to use immediately. New machinery purchased on 1/12/2023 and computer have been installed in the office. So guys, on the computer additional depreciation is not allowed, and new machinery purchased on 1/12, here also additional depreciation not allowed, normal depreciation is allowed. Now guys, there is a one information. Okay, during the year ended 31st March 2023, that is last year, a new machinery was purchased on 31st October 2022, means last year you have purchased one new machinery for the 10 lakh, and additional depreciation beside the normal depreciation has been claimed in the last year. So guys, in the last year when you purchased the machinery on 31st October 2022 for the 10 lakh, then can I say that in the last year 10% depreciation you have claimed? Last year 10% depreciation you have claimed. So when last year 10% depreciation you have claimed, then the remaining 10% depreciation you will claim in the current year. So remaining 10% depreciation you will claim in the current year. Remaining 10% depreciation you will claim in the current year. So guys, here 1 lakh depreciation is allowed in the current year, because last year that asset is put to use less than 180 days. So on 10 lakh you must claim the 1 lakh as depreciation. So 1 lakh remaining additional depreciation allowed in the current year. Depreciation rate is 15%. Assessee has not opted section 115 BAC subsection 1A. He is opted out. So this is one question. If you will check the answer, you will get the question. Dr. Arjun run a clinic in Delhi. As per the new rule in the city, private car can be plied in the city only on the alternative days. So you know that in Delhi there was a concept of odd even. So asset you can use only on the alternative day. So its depreciation is allowed at half rate or full rate. Right answer is full rate. Even you use the car, this is not mandatory that every day you should use the car. Even one day you use the car, you can claim the depreciation for whole year. But subject to that, it should be used like before that 5th October. So Dr. Arjun run a clinic in Delhi. As per the new rule in the city, private car can be plied in the city only on the alternative days. He purchased one car on the 25th September 2023. This asset is for the more than 180 days. Okay. For the purpose of his medical profession, as per following detail, cost of car is given 15 lakh. GST is given at 28%. So his total cost is 19 lakh 20,000. Now question is that if GST will be part of your actual cost or not? Answer is yes, if input tax credit is not available. And you know that on the car and all, input tax credit is not available. So on the car and all, input tax credit is not available. So when here input tax credit is not available, when here input tax credit is not available, here input tax credit is not available, then obviously you cannot claim the input tax credit not available. It means on the total 1920 you will claim the depreciation. He put his car on 15 put to use on same date. He estimated the uses of car for the personal purpose will be 25%. It means only 75% depreciation is going to be allowed. He is advised by his friend that since the car is run only on the alternate date, so half the depreciation which is otherwise allowable will be actually allowed. Is half rate depreciation allowed? Answer is no. He has started using the car immediately after its purchase. Determine the depreciation allowable on the car for assessment year 24-25. If this is the only asset in the block, if this car would also be used for subsequent assessment year 25-26 on the same terms and condition above, what will be the depreciation allowable? Assume that there is no change in the legal position under Income Tax Act 1961. So guys, you know that first your depreciation you will calculate at the rate 15%, but out of that only 75% depreciation is allowed, and whatever actually allowed now, only that will be reduced from your block of asset. Whatever depreciation actually allowed, only that will be reduced from your block of asset. So this was your paper. So I think paper was not that tricky, simple paper. Some question I opted from the intermediate only, because in the CA final there is no much question on the depreciation, because in the big question they just put one adjustment related to depreciation. So I have opted various questions from intermediate in this particular paper. Okay, so this is the completion of discussion on the test paper number 4. Done. Any doubt? Any doubt in any explanation, then you can ask me. If you have any doubt, then you can ask me. Otherwise, we are winding up today's lecture. Tomorrow we'll start with the next part of section, next part of PGBP. Done, people? No doubt? Okay. So that's enough for today. Bye. Take care. See you tomorrow. Tomorrow we'll start with the next part. Thanks a lot, people. Today I am leaving you earlier. Bye, good night. Nehal, Meghna. Chalo, bye, take care.